exposing the New World Order scumbags. The Pork Chop Report with your host, Ken Coe.
Today we have a very smart lady with us. Her name is Lynette Zhang. She's the chief analyst of ITM Trading in Phoenix, Arizona. She's an economist and a former banker. Welcome, Lynette.
Thank you so much for having me, Ken. This is a pleasure.
It's my pleasure. Lynette, could you just briefly tell us a bit about yourself?
Well, I've been groomed for this moment in time, and on some level, yes, I was a banker, and I actually started in banking when I was 15. And then after I had my children and a divorce, I frankly needed more money, so I became a stockbroker. And it was really in that capacity. That was 86. And in 87, I stumbled up. I was doing some non-dollar denominated bonds, which is really about currencies. And so that's when I started studying currencies. And I also consider myself an artist, so what I can see are patterns. And that's when I realized and saw, because once it's pointed out, it's pretty obvious, that currencies, like everything else, have a life cycle. I mean, I have a 4-year-old grandson and a 2.5-year-old granddaughter. And at 63, almost, I can tell you I'm at a different part of my life cycle than they are. And currencies are no different. So I came here to ITM in 2002 after most of the formulas that I use confirmed that we were starting the end phase of the money life cycle. And so I've been here, I built the database, and I've been here ever since.
Thank you. Today I would like to talk about the IMF, SDR, and ACC. But before we get on to that, just very briefly, can you just break it down for the regular guy? What do you think the state of our current economy is, global debt, and what's happening with the dollar?
Oh, well, okay. So actually, I think this chart really says it the best. Can you see that okay, you think?
Yeah.
Okay. So what you're really looking at here is the global, the central banks, the key central banks' debt that they've grown, and they've done $2 trillion just this year. So while all of them are talking about unwinding their balance sheets, you know, I mean, I listen to what they say, but I look at what they do, because that, frankly, that tells you whether or not what they're saying is true or a lie. And I don't think this looks very good. If we're doing so well, why in the world would they need to inject $2 trillion in new money just this year? And, you know, the state of the dollar, okay, I'm going to back up to move forward, because I find that we've been trained not to understand what money is. And if you don't understand what money is, we've been trained to just think of it as a tool of barter. And while that certainly is a key in there, its most important function, what it was really created to do, was to value labor and then store any excess labor for future use. And the goal was to have the same level of purchasing power, so that the same amount of money would buy the same amount of goods and services. And over the years, they tried many things, but only gold met all of the requirements to be a good, sound money and hold that value. But of course, it's also labor-based. I mean, it takes labor and effort and energy to pull the gold out of the ground. So it was a really fair way to value labor for labor. However, if a government wants to tax you, you know about it, and you might not be agreeable. So they converted our good money standard, the gold standard, into fiat money. And the literal translation of fiat is by decree. And by design, inflation is baked into it, because they knew two things. They knew, number one, that people do not understand inflation. And number two, they know that people marry the legal money of the state. And so I do have, boy, and here I thought I put, oh, it's right in front of me. Okay. This really shows you what fiat money can do. This is called nominal confusion. And this is what they count on. So if you had a $20 bill 20 years ago and you have a $20 bill today, nominally they're identical. But we all know, go to the grocery store, that what that $20 bill would buy then and what it buys today, vastly different. So the inflation, the fiat money, really enables a government to tax you invisibly without having to go to legislation. Because, hey, they're talking about inflation as a good thing. Well, if your income keeps pace with it, then I suppose it wouldn't be so bad. But by design, your income never, well, most of our incomes never do keep pace with inflation. So where a family of four could live on $9,600, which was the average income in the early 70s, today we're at something like $56,000. Nominally, that sounds pretty good. However, a family of four could live with one wage earner in 71 on $9,600. Today, can a family of four live on $56,000 a year? Exactly. Voila. So that is a way for a government to tax you without getting that pushback. Now, for corporations, the benefit is that the goods that they produce always keep pace with inflation, because that's what really causes the inflation. Well, it doesn't cause the inflation, but that reflects the inflation, I should say. And so, again, average wages never keep pace with inflation. But so the average income, what they're really doing is they are paying workers less and less. And that's why we have this huge income inequality gap, because the profits are more and more. And so then the cream rises to the top. And where we are with the dollar is, according to the Federal Reserve, and I'm sorry I didn't print that chart, but according to the Federal Reserve, there's only 4 cents out of the original dollar's worth of purchasing power. And so the real trend is actually what's happening to the dollar, because without exception, and it's not just the dollar, it's all fiat money. The pound, I mean, you're in London, so you know what's been happening. Your cost of living, has that gone down?
No.
Exactly. Exactly. And I'm sure wherever anybody is in the world, they would say the same thing. And so the value of every fiat money at the end of the day, and it's been tried over 4,800 times, is zero. And so that would be true with any of the instruments that are created from dollars and can only be converted back into dollars. Even though it looks like the stock market, we're in the melt-up mode. I'm 100% convinced of that. So, even though the stock market keeps going up and up, as the dollar keeps going down and down, if these are all valued in terms of dollars, when the dollar has no value, how much value do those things have? But that's how it helps the nominal confusion. So we're at the end of the cycle. There's not one doubt in my mind. And let's face it, world reserve status does not last forever anyway. And so it's time. Could you see that okay?
Yeah.
Okay, so it's really time to transition the currency into the next money standard.
Yeah, it's because I've been tracking the dollar since December, where it peaked, and it's just been tanking. So is this it? Are we really close to it? Because the dollar has just been going down.
Well, what you're actually referring to is one way to value money, and that's against other currencies. And they had to shift the dollar against those other currencies, because when the dollar was getting really strong against all those currencies, there's been a tremendous amount of debt taken out, foreign debt, taken out in terms of dollars. So as the dollar got stronger, it was more expensive for those corporations to service that debt, which threatened a lot of bankruptcies. So, you mentioned Jim Rickards to me before we came on, and this would be a conversation to have with him, because I believe I remember him saying that, I'm pretty sure it was January, but I could be off on this, that there was a meeting of a lot of the I think it was the G7 or something like that, maybe the G20, where they decided that the dollar needed to get weaker because of all of the emerging markets, China, read China in there, that have debt in terms of dollars. So I do know that this is the end of the dollar system, but looking at the dollar against other currencies is not going to tell you what's really happening with the currencies. That is really about purchasing power. You know, and that's how it impacts us.
So you said before you believe we're at the end of the cycle. So is this the reset that you've been talking about?
Yes, exactly.
So
because think about this. In the fiat money system, money is created by debt. Okay? Well, you can't really build wealth from debt. And in fact, what happens is if you grow too much debt, you become insolvent. And if you look at our global banking system, they are insolvent. We cannot even afford a 4% downward move in these instruments or assets. And that's when, the reset would be forced. And of course, you need a crisis to make this transition. But the transition has definitely begun. And they're definitely taking us into the cryptocurrency space. There's not even one little doubt in my mind about that. Because that gives them full control. And immediate control.
Okay, so could you break that down for us? You're talking about the reset, bringing us into cryptocurrency. You're referring to the IMF and their SDR, and could you explain about that?
Yes, and I'm going to back up to move forward in that, because it was in 1944 that the dollar became the world reserve currency. And what that actually means is if you are going outside of your borders to buy anything, oil, lumber, steel, whatever it is, medicine, you had no other alternative but to use dollars in that transaction. So we were the only country that from debt could create the money to pay our international bills. Everybody else had to buy dollars in order to do that. Well, when we started funding the Vietnam War, we started, and I should have said this, and in exchange for that huge benefit, we said that we would keep the value of the dollar at 35 to 1 ounce of gold. So we would keep a stable dollar. But when we started funding the Vietnam War, we started printing a lot more dollars than we actually had enough gold to back. And governments around the world knew this. And so there was a run on the dollar that ensued. And they started converting their dollars into gold. So that by 1971, when Nixon took us off the gold standard completely, we had less gold in deep storage than we did prior to the confiscation in 1933. What he really did, and that was a money standard shift. And the reason why I bring that up is because, well, I don't know how old you are or your listeners are, but I'm going to be 63 in October. So I was around in 1971, and I remember what that looked like. And that is standard to every money standard shift. And what happens is, I hate to say this, but it's just true. There is always a war, and we can certainly see what's going on in North Korea, okay? So there is always a war. The stock markets implode, the bond markets implode, and interest rates go through the roof. And then there is that money standard shift. So in 71, I was around. I saw all the chaos. I mean, we had lots of chaos in that period of time with the oil embargo and women's lib and the civil rights movement, in addition to all of that stuff. So it was easy to be distracted by all of the geopolitics and all of the different turmoil that was happening. And so if you had $1 in your pocket on, July of 71 and you had $1 in your pocket in September of 71, you didn't know that there was a shift. But the reality is we went from a gold standard to handing full control of inflation to central banks who only know debt and leverage. That's what banks know. And so we went on to that debt standard. This is just from the crisis. This is not the total debt, but this is just from the crisis. Because initially, when you start growing debt, and as long as your income can maintain your debt payments, it's not such a problem for you to continue to grow debt and stimulate the economy. But we hit peak debt in 97. And so from that point forward, no matter how much debt they've grown, we have not been able to stimulate the economy. And I don't think they really want to be perfectly honest with you, because there are better ways to do it than the choices that they've made. And I know that they know that. So, we're coming up to a money standard shift because we are now at the end of the life cycle. And really, they've known it since 97. And so then what happened in there was they created the derivative market and allowed that to just go crazy. And I know I have a graph on that here somewhere. But they allowed that to go crazy, and that's what burst the bubble in 2008. And that was all about layers and layers and layers of leverage. And so since 2008, we've been on life support. That's what this is. This is life support, and all of the QEs and all the different things that the central banks have done, all the QEs. So that's all about just keeping the system alive until they could get the new money standard in place. But the IMF created the SDR in 69 to take over as the world reserve currency then. Didn't need to do it because Kissinger went out and created the petrodollar agreement, forcing the world to buy oil in terms of dollars. But what's happened with that recently? China is opening up the first exchange where people can, or countries can, exchange oil for gold. And Argentina just announced, or was it Venezuela? I think it was Venezuela, is no longer selling their oil in terms of dollars. And I think that just was announced yesterday or the day before. So we've lost that. If that's what kept us having that status. So and the SDR basket, I mean, there's so much stuff, but the basket has changed a lot. And I can show you this here. This was the SDR is a basket of currencies. It is not a claim against anything. Rather, it's a potential claim on the currencies inside of the basket. Okay? They had to change the rules, but in 2009, China called for the role of the SDR to be expanded. And as soon as they did that, because I'd been tracking it, and I certainly knew that we were going to have some issues coming up, but as soon as China said, the SDR, I said, that's it. That's absolutely going to be the new currency. And so, because everybody had some, it'd been around since 69, they didn't have to reinvent the wheel. They just had to tweak the one that was already in place. And that's what they've been doing since 2009. They've been tweaking that wheel and getting it ready. And in 2011, they came out with their outline of how they would make that transition. And one of the keys in that, here's that. Oops. Carl put something on there. But what they really made quite clear is they had to develop a market for SDRs. And China, being a technocrat and a technocratic government, was the one that could spearhead this move. So I'll just show you too, because this is part of that same report that I just showed you that I'm going to send you the link to. They talk about the need to develop that new market to have that reserve asset, and also to get ready to reduce the exchange rate swings. In other words, get ready to get rid of the dollar. That's what that paragraph is saying right there. And they had to, so China was selected to spearhead it in, I believe it was March of 2016. They opened up their banking system, which is the second largest banking system in the world. And then they made a number of moves. I think this, yeah, this is the one. So here's Moody's, you know, saying, oh, they opened up that their banking sector. How wonderful is that? And they were getting ready to be included in that SDR basket. Now so this is what happened once they were included in there. The power shifted. And as of last December 31st, there were actually now enough votes. And again, this is from this one. Oops, I'm not sure where that is. But anyway, you'll when you talk to Jim, he can definitely address this too. But they have enough votes as of December 31st of this current year, 2016, going into 17, to over or veto the U.S. power at the IMF. So the power is definitely shifting to China, which means that they are absolutely getting ready to replace the dollar. And the currency that they want is the SDR that they can control.
Well, you don't hear any of this on the MSN mainstream media, and this IMF, that they're unelected, right? I didn't vote for them, and they decided to kill our dollar and bring us into a one world currency.
Well, bankers are not elected; they're technocrats, and technocrats care more about the systems than they do the people. And we can look at what's happened in Greece for an incredible example of how bankers, the value that bankers put on individual lives. And we've all experienced this through the crisis. I don't care where you are in the world, but we've experienced that the banks are the ones that are getting supported, not Main Street. And we all need to know about this, because really, I mean, this magazine cover, you've probably seen it 1,000 times.
Yeah.
Okay. And it called for in 2018, and there are a lot of dates that really coincide with that. So we're inside of an accident waiting to happen, because they need a big crisis to make this transition. And yeah, most definitely there's no doubt about, in my mind whatsoever, that it'll be the SDR.
So you concur with Jim Rickards, they're hoping a crisis in North Korea, and they'll use that war as a crisis to move us into a one world currency, SDR.
That's one thing. Remember, there's a lot of chaos. We also have to look at the level of leverage in the banking system, because the leverage means that you can't afford that 4% downward move in these markets. And I just did this in one of my reports recently. These are from the bank's stress tests. And these are U.S. banks, but Deutsche Bank, according to the IMF, is the most systemically dangerous bank on the planet. And when I did this, up on the upper range, which is Wells Fargo, I don't know if you've heard about all the scandals that are going on with them. But okay, anyway, their leverage ratio is 6. Let's see, what is it? Oh, something like 6.25%, which means that I broke these down into tables to help people understand it. So I'm going to hold that up. Can you see that top table? Yeah. Okay. So, and I just wanted to make it easy because people don't understand the leverage ratios either. But let's say that you put down $40,000 on a house, just, and you buy a $640,000 house. Well, if that house declines in price by 6.25%, okay, it has used up all of the equity in the house, and you are now underwater, okay? But the riskiest one here in this country, and this is very similar to Deutsche Bank, is Morgan Stanley with a 3.57 leverage ratio. That means that if their assets drop more than 3.58%, they are insolvent. They have used up all of their equity. Okay? I mean, that's crazy. Prior to the crisis, the minimum was a 12% leverage ratio. Well, that at least bought you a little bit of a correction. But there's no room, there's no margin in here. None. So you put that together with the war, and I'll also show you this, which I think is really interesting. This is from the Office of the Comptroller of the Currency, runs a report on derivatives in the FDIC. So they want you to trust the insurance, although there's less than a penny in there to insure every dollar, but okay, fine. So these are the derivatives in the banking sector. And you can see right here that this was the derivative that exploded in 2008 and set us on the current path that we're on. But these are the speculative derivatives. Remember, debt didn't really work to stimulate the economy after 97. So they went into this speculative derivatives. Okay, well, Goldman Sachs has, for every asset, they have $236 or $39, yeah, 39 worth of debt. Okay, so between this and war, you've got your crisis. You see it?
Yeah, I see it. And I think I heard you, was it yesterday? When this whole crisis, next financial crisis happens, you talk about sweep programs. Is that like a bail-in? Is that how they're going to do it?
Whoa, well, yes. Well, okay. When I was talking about the sweep programs, what I was specifically referring to is that in the mid-90s, a lot happened in the mid-90s, and this is one of them. They modified what's called Reg D, so you can go online or you can ask the manager at your bank, do you comply with Reg D? They will probably say, yes, we do. And what that does, it allows them, whatever you deposit into your account, it allows them to sweep that money into a sub-account that is in their name. And then they can use that as collateral to borrow. They can lend it out. They can do derivatives with it. They can do anything they want with it. So that's the sweep program, and also why the bail-in is necessary, because you just saw the leverage rates. And if you have your money in any of the FDIC insured, banks, and it's not just those, but yeah, that's what justifies the bail-in, because they're insolvent. And the bail-in laws that were put in place in 2010, then they were tested in Cyprus in 2013, but the bail-in laws say that the failing institution has the right to convert those holdings into shares of stock in the failing institution. That's the eminent domain laws. They can do anything they want. They just have to give you fair market. And who determines the fair market of shares of stock in a failing institution that has no market? I mean, it's insanity. The Bank for International Settlements, it was, I think it was June 2013, came out with their template, a global template, of how they would do that over the weekend with or without deposit insurance. So, I mean, look at what happened in Cyprus. they had no access to their accounts from 2013 until late 2015. In Greece, that started in June of 2015, and they still don't have full access to their accounts. But they're definitely driving them digital. 100% they're driving them digital. So,
get your money out of the bank, basically.
Yeah. You know, I mean, if you have auto deductions or you have auto deposits, well, then you need to keep the account open and funded enough for that. But I personally don't keep any extra in there. No way. Why would I give them? I don't like them to make 1 penny more than I have no other choice about at all. And in fact, you know, I realized one day when I was doing this and I was listening to myself, and I thought I'm being hypocritical because I use my debit card. You know, I got rid of credit cards a while ago, but I do use my debit card. And I went, wait a minute. Every single time I use my debit card, I am buying into the system and the bank is making money from that transaction. Even if I go to a local store, why would I want, that's coming out of the merchant's pocket, which means then they've got to turn around and charge me more so that they can give me that cash back or whatever other incentive that they're using to sucker me into this game. So I stopped doing that once I saw that, and that's what we all have to do. It's a paradigm shift. And you go, wait a minute. I've been lulled into this false sense of security just like everybody else has, and been complacent at it. I mean, supporting the system that they created for me that I know is not in my best interest or your best interest or anybody's best interest. So I'm definitely using a lot more cash these days and will continue to do so. Not for everything, obviously, but for certainly I carry a lot more cash with me than I did, and I use a lot more cash than I did. And if we all started doing that, we could perhaps battle some of this crypto stuff. And I know that's inevitable. I do.
So, you know, most Americans, a lot of them are working, living paycheck to paycheck. What would your advice be to, you know, struggling Americans trying to pay the bills? How should they prepare for the coming reset?
It's a great question. Well, here's the mantra. Food, water, energy, security, barterability, wealth preservation, and community. And I think community, that's really what you and I are doing here today. That's a big key. But, you know, if you go to the grocery store and rice is on sale or canned tomatoes or corn or peas, whatever is going to hold dry beans, you know, if you don't have a lot of money to put into it, you can probably buy a bag of beans, right? So you want to be as independent as possible. For barterability, and I tell people, look at where your holes are. Where do you feel the least prepared? And then start to fill in those holes. Because not many people can do everything all at once, and especially if you're living paycheck to paycheck. But you definitely need to understand that during these periods of time, there are essentially three kind of parallel economies that grow up. You have one that's completely dependent on the fiat money. And so in that case, you become completely dependent on the government. And so I'm really sorry, but we can just look at Venezuela for this. You starve, so it's a lot of depopulation, and you do not get medical care that you need. Then you have the barter economy. So any skill set that you possess or anything physical. I mean, you see, I wear jewelry. The reason why I wear it is because I want people to see it's physical. Now, this isn't real, but it's still physical. So I can barter with this. This is real. It'll get me further. Okay? But anything physical, any talent is barterable. You can put in a garden. I have chickens. That means I have eggs. I can barter with my eggs. Okay? So I'd say make sure that your skills are tight, But, extra toilet paper, which is in huge demand during these periods of time. I know that sounds funny, but it's true. Alcohol, because probably people are going to want to get drunk. This is not going to be a fun experience for anybody. And I mean, we're kind of laughing about this, because it sounds funny, but I'm really serious about that. So regardless of what your circumstances are, you can prepare. And here's another thing that people really need to know. Gold and silver in any form are monetary at its base. So if you happen to have Aunt Bessie's sterling flatware and it's all broken, it doesn't matter, it's tarnished, it doesn't matter. That is 92. Anything marked sterling or 925 is 92.5% pure silver. And that can buy you a loaf of bread. Okay? So, and 14 karat gold is 58% pure. 18 karat gold is 75% pure. So, it doesn't matter what the condition is at all. It's monetary at its base. So that is another way. You can go out to yard sales or estate sales with, 20 bucks in your pocket or 20 pounds in your pocket, and you don't know what you're going to find. It used to be a lot easier to do that than it is today. But, you might be able to find something. You just want to look at that mark, make sure it's sterling or 925, and there's your barterability. So wealth preservation, I like gold, but you asked me, if somebody is, the normal Joe that's just struggling to get by, that's a great way to do it. And even if you go into like an antique mall or something like that, and there are dealers there, my bet is they're going to have some scrap silver that's broken and dinged and that they don't think has much value. But if you offer them to buy it at spot by weight, okay, and content, that's more than they'd get if they sent it in for smelting. So they'd probably go along with it. And you can walk in with whatever you have and say, hey, what have you got? And so there are a bunch of ways to accumulate, but I suggest you do it now. That would be for sure.
With families, middle-class families in America with, let's say, a few thousand, up to 10,000, you suggest buying a few gold coins or silver or bullion?
Well, I think you need a diversified portfolio, and that means that you want some things for asset protection, and that protects your current standard of living and your purchasing power. And so, yes, you would do that with things like junk silver, the kind of silver that I was talking about, and the bullion silver is absolutely fine. And then you need a little bit of gold in there. Personally, I think there's going to be an overt confiscation like we're witnessing in India, and we've seen it happen, in Venezuela did in 2011. So I think, I've done studies on the laws on the books, and, I'm certain, I could be wrong about that. But since I think it's going to be overt, my personal preference is again to do what the smartest guys in the room are doing for themselves. So I like things like maybe a gold Swiss franc, which is probably somewhere around $300 right now. Our minimum is $500 because we think everybody needs to have some coverage. So depending upon the circumstances, you want some asset protection gold and some asset protection silver, and then you want some growth gold to position into, to take advantage of the opportunities that also present. I mean, it's not, everything is pretty bleak, but that also means that there are a lot of opportunities. So if you can be in a position to take advantage of this wealth transfer, because the bankers always have it transfer their way. Well, let's have it transfer our way, I'm thinking. So that in that case, yes, I want gold, and I like, my preferences are the collectibles. Because I have a better chance of being able to keep them and then use them in the normal marketplace, which is where I want to use everything.
Could you quickly talk about the ACC and SDR? You caused a little stir among the
Yes.
cryptocurrency community. I
Yes.
saw the interview
And
on
I'm
SGT with Cliff Hive. I was shocked with the response. That was really scary about digitizing the team. I'm worried about that.
I'm worried about that too. And one of my viewers sent me in a link, and when anybody sends me something and says, "Will you look at this?" I will. I always do, because I only have 2 eyes. Although we have a lot of eyes here, but still. And so he sent me the article on AC Chain, and like I said earlier, I mean, obviously I've been following the SDR for many, many years and high on my radar since 2009, because, the IMF is made up of every Treasury Secretary and every central bank chief on the planet. So they are the ones that are driving this bus. And what I discovered when I looked at it is that the AC Chain is about dematerializing and turning into a digital asset all of the physical, can you see that okay? Yeah. All of the physical assets. So they started out with T, and then they issued an ICO, an initial coin offering, and they sold this T that was held in a warehouse in China, and then they moved on to real estate outside of Dallas, and they're converting this real estate into a digital asset that Americans cannot participate in. And I know that China just shut down the ICOs, but we've got to see this. And when all those guys got really upset, I mean, look, I'm all about data. And I'm not telling you that I won't change my mind. Just give me the data and then let me formulate an educated opinion. I have not found, so if anybody's out there and they're into this crypto world and they have come across one, because I jump in this all the time these days, I have not seen any other cryptocurrency that is tied to the SDR. And that's the part that really freaked me out. Because what you have is you have a gateway between Bitcoin and Ethereum, which are the 2 most popular cryptocurrencies. And when you buy them, the AC Chain with either one of them, ba-boom, they turn into an SDR. Now, the crypto guys are always talking about how this is going to be the savior because it goes around the system. Well, no, it doesn't. Look at who's involved in this crypto world these days. It is part of the system. It doesn't go around the system. And once everything is fully digitized, they can do anything they want. And you can see in this example that you'll have this node. So that's kind of like an exchange. You'll have this one and one in China and somewhere else. But it all goes through the IMF. All of it, all of it, all of it. And actually, this is what they classify as decentralized. So there are 2 arguments, and one is this decentralization argument. Well, China's government is decentralized. Let's see. Where is that control there? It's at the top. It's at the Communist Party, who's now integrating into all businesses. That's a whole nother story. But the Communist Party dictates. That's why China was the one to spearhead this. So decentralized, I don't think they fully, and I'm sure I'm going to get a lot of flack for this, but I don't think they fully understand what a decentralized system is. Because here it's, okay, it still all goes here, but here's one, here's one, here's one. Okay, decentralized. But the control is still at the IMF. Okay? Now, they're putting this freaked me out. Okay, this is a hard one to look at. But again, I'm going to send you links and images so you'll be able to see this better. But they show you all the ways, once they turn your house or any of your other physical assets into coins, they put them on a base of MasterCard and Visa. Are you kidding me? So that you can go to the mall or go online and shop and use any equity that you have in any wealth and spend it. And that's exactly what they want us to do. Because ultimately, whoever has the money is going to own all of this stuff, and we become renters. We'll own nothing. Now, I'm not saying this happens overnight, okay? But right now, they're looking for a critical mass. In fact, a report I'm doing tomorrow, the Bank for International Settlements over, I think it was on the 17th, came out with central bank cryptocurrencies. And that's a really interesting report. I'm going to be talking about that tomorrow. But in their report, they even talk about allowing the masses to have central bank money, so that you're right in the belly of the beast. You're right in the belly of the beast. So this is happening, and it's happening quickly. They're just waiting for enough people to adopt it, which is why I said use more cash, okay? Because it's going to be harder for them to do it, okay? And I know that this is inevitable. I seriously do know that this is inevitable, but I don't want everything digitized. I want to have some privacy. I want to be able to hold my wealth, because the whole fiat system is contract based, and the idea that they're going to use are those smart contracts, which are self-executing. And who reads any contracts before they agree to something? Probably be okay short term, just like dollars are okay short term. But if you hold them, it's not so good, because you're losing all that value, right? That's right. And the example that they used when they were talking about this, and I mean the IMF, that's who I'm referring to, is let's say you buy a car with a smart contract, and let's say you don't make a payment. Well, the contract would automatically disable that car. And heck, with autonomous driving, they'd probably even drive it away. So that's what they want us to work for. You got to understand, the function of money, I go all the way back to that, is to value your labor and store it for future use without a loss of purchasing power. Fiat money was designed to rob you of that purchasing power, and they say, the central bankers say, that there would no longer be any restrictions to how low they can push interest rates, which means erode your principal. They've already taken all your purchasing power. The next step in this piece is to get all your principal. That's what all of this is about. And then they have full control. They don't like my politics. They don't like what I'm saying on this show. Well, fortunately, I now have become an urban farmer because of all of this. Started my farm in 2010. Well, okay, it might create some challenges for me, but I'm not gonna worry about starving. Okay, so
in Sweden, they started microchipping people to replacing real train tickets.
Well, and that's why I frankly, I'm working on this with my daughter, who's a Gen Xer. She's not really a millennial, but we need to get everybody to understand the jeopardy that they put themselves in. I mean, right now they're allowing Bitcoin, they're allowing all these Ethereum, all these ICOs, everything to explode because that gets more eyes on it. And then that means that they develop more comfort with it. And then at, I think it's 3% critical mass, they feel that they can then start to push it even further. And I think we're at maybe 1.5%. Cliff would know better than me on those numbers. But I'm pretty sure it's like we're at 1.5% or something like that. So we have a window, but they want us to adopt this. And you're right. I look at my grandchildren and they're just scrolling through and they're doing this and that. And, you know, I think they were originally waiting for us older people to die off, and so for the adoption. But we have to get this message out because, you know, I can see advantages to it, but boy, I see the disadvantages to it huge. And I think, in my personal opinion, the disadvantages of this cryptocurrency outweigh the advantages. So if we could create a system where we could still retain, you know, some level of privacy, don't give up your cash. Don't give up your cash. There are more of us than there are of them. If we disagree, they can't do it. They did TSA 2 days before Thanksgiving when people wanted to go to Aunt Bessie's for turkey, right? If everybody had said, no, not walking through that line, it would look different. So that's the importance of, there are lots of important pieces that are important to community, but that's a big one. For me, that's a big one.
Well, thank you, Lynette. Unfortunately, we're out of time. I'm all for decentralized system, like blockchain, if it's decentralized, but I think it's fair to say, based on your work and what you've presented, that there's at least a potential for concern, and at least there should be more scrutiny and debate
in a decentralized, yeah, but in a decentralized system, there still can be one place that has the ultimate control. So even in a decentralized system, China's decentralized. Really, who has the control? The Communist Party. That's who has the control, even though their system is decentralized. And that's what we're seeing, you know, that's really what this is showing us. It's decentralized, but one place, let me see, where am I? But one place has control.
The nodes, the super nodes.
And the IMF. Ultimately, everything goes through the IMF. And that's really what they talked about a lot in the Bank for International Settlements new report on central bank cryptocurrencies.
Thank you, Lynette. Can you tell people where they can learn more about you and your work?
Oh, absolutely. Well, they can go to itmtrading.com, and they can go to YouTube, and I do educational webinars. They're short, like 3 times a week, and on different topics, insider trading. And they can give us a call at 888-696-4653, or they can send us an email. We love questions, and we've got a lot of smart people here, not just me, and we're happy to answer any questions and set up strategies and help you in any way.
I thank you very much for the work that you're doing.
Illuminati-free zone. For what shall it profit a man if he shall gain the whole world and lose his own soul? The Pork Chop Report.